Welcome to the Pirls Stock Market Commentary for market week ending Friday, February 28th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.55 to 1.91, advancing further into bullish territory. The total count of securities in bullish or bearish patterns rose 3% to 2,117. The count of bearish stocks decreased 10%, while the count of stocks in bullish patterns increased 11%. The Pirls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. A free 2-week trial subscription is available for those who are interested. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 167 points for the 14th rise in 29 weeks. At a positive 344.73 points, it continues below 7 of the 8 tops above plus 100 and above all 6 bottoms below minus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 5 accumulation days and 1 distribution day. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Tuesday, 2/18 close, the CCI 20 daily had 6 days above zero for a change of trend. Now at 87.36, it continues outside the plus or minus 50 range for a valid zero line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 54 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly again continued upward for the second week, following last week's zero line reject long entry point. We will continue to follow this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and the bottom 5 are negative. Bullish, disk drives has entered the top 5. Gold and silver has left the top 5 and entered the bottom 5. Networkers has left the bottom 5. Banks and S&P retail have left the bottom 5, and S&P retail has entered the top 5. Bearish, computer hardware has entered and leads the bottom 5. Semis has left the top 5. Oil services has entered the top 5. Focus this week. Keynesian political economy is theft, from Monty, Pelerin's world blog on economics, politics, and investing. A few points from the article. The plague of our time is Keynesian economics. It has destroyed the economics profession and enabled the political class to obtain powers never intended. Keynesian economics provided the intellectual cover for the criminal class we politely call government to plunder its citizenry. There was little new in Keynes's work, and many errors that had been debunked decades before Keynes was even born. Bastiat's parable of the broken window in 1850 is probably the best known refutation, although similar arguments preceded Bastiat by a century or more. Ludwig von Mises, never one to mince words, described Keynesian economics in the following manner. Quote, "What he really did was to write an apology for the prevailing policies of governments." End quote. Thank you for tuning in for this week's Sand to Pearls stock market commentary. Hoping that your weekend has been fabulous, that you have a great week coming up, and we wish you true success.